When I think about companies that have a durable moat, I often think of Adobe. You think of the products and the subscription type service that they offer, and it seems to have a wide moat. However, more recently, with AI advancing significantly in the last couple of years, there have been questions around how durable really is this moat for Adobe. And in today's video, we're going to discuss just that, because over the past year, Adobe has beat analyst expectations on both the bottom and top line each and every quarter. So there's clearly a difference in what analysts are expecting the impact to be on Adobe's business and what we're actually seeing in reality. Adobe is a company that doesn't get a whole lot of love on social media. So if you're watching this right now, please drop a like down below. And also while you're down there, if you can leave a comment, it'll help promote this video out there and get people to watch it, because I do think that this is a very interesting company and could be one that outperforms in 2025. So please, again, drop a like down below. And if you haven't yet subscribed, it would mean a ton to me, and enjoy the rest of the video. In the last year, Adobe is down over 30%. And if we look at the last 5 years, it's been a very volatile time period for this company. They peaked in 2021 just under $700 per share. From there, the stock fell by 60% down to a level of $275. It ran back up to around $630 per share, but from that point, the stock has fallen again by 35%. And that's despite very strong performance over the last 5 years. If we look at the end of 2019, they were bringing in around $11.2 billion of trailing 12-month revenue. That has since increased by almost double to $21.5 billion. And this recent drop in the stock price of 30% over 2024 is a little bit unusual because of what we have seen from the metrics behind the business. If we look at their full year guidance for 2024, they projected that they would be somewhere between $21.3 billion and $21.5 billion. They slightly beat that number, coming through with $21.51 billion. Also, in terms of their digital media net new annualized recurring revenue, they came through with $2 billion, beating expectations of $1.9 billion. And this continues for other key metrics like digital media segment revenue, where they put up $15.86 billion, as well as non-GAAP EPS, which came through at $18.42 for the year. There's no denying that these beats are very small compared to the guidance. However, it's not like they provided guidance that was revenue falling by 10% and instead they only fell by 5%. They still projected growth and were able to beat those growth numbers. And these were consistent beats over the last year. They beat quarter after quarter on both the top and bottom line. EPS beat by anywhere from 2% to 3%, while revenue beat anywhere from 0.3% to 1.17%. So we're not talking about massive beats that are blowing analysts' expectations out of the water, but they're still showing very consistent growth and consistent beats on what analysts are expecting. So ultimately, this is not a problem of top or bottom line numbers for Adobe. It's a question of what is going to be the future for this company. When we think about AI and image generators, as well as even video generators, there are so many players coming into this market. Adobe is just one of those players. However, you have other companies like DALL-E, as well as Midjourney, Canva, that have all taken massive market share and are really appealing to a lot of the customers that Adobe looks to try and bring into their ecosystem. And these aren't just a bunch of small one-off players coming into this market where Adobe could look to acquire them. What we're looking at right here is Imagen 3. This is Gemini's AI image generator, which is owned by Google. Also, if you think about DALL-E, that is owned by OpenAI, which Microsoft has a significant share in. In my opinion, looking at this market, it reminds me a lot of streaming services just a couple of years ago. You had all these players coming into streaming, and ultimately what that did is it created a lot of competition where people had to buy all these different streaming services and try and prioritize which ones they actually wanted the most. However, one thing to keep in mind is that Netflix was the established player in that market, and right now it appears that Netflix has won out. That is very similar to what's going on in this market. Adobe is the established player in this market. They have a proven business model, and I think it's going to be very difficult for these other players to come in. However, this is just the start of the competition. Adobe, in my opinion, is the #1 player in this market. However, over the next couple of years, they need to prove and maintain that position, and that looks like it's going to have an impact on some of their numbers, as they offered first quarter guidance on revenue that was a little bit disappointing compared to analyst expectations. They provided guidance of $5.63 to $5.68 billion of revenue compared to analyst expectations of $5.73 billion. Because of this disappointing guidance, Deutsche Bank lowered their price target for the company from $650 to $600. However, they are still maintaining their buy rating on the stock. And honestly, I think that they're maintaining that buy rating just because of the type of company that Adobe is. They have a very strong business model of getting people into their ecosystem and building out their capabilities so that people feel like they need Adobe to actually execute some of this work when it comes to Photoshop as well as Premiere Pro and some of these other platforms that they offer. People get used to how they operate, and it's very hard for people to switch to other editing softwares, whether it's editing photos or editing videos. It becomes a little bit more difficult to navigate other UIs or user interfaces when you look for people trying to transition between the two. And this is very clear when you look at their top and bottom lines. If we zoom out a little bit, you can see that Adobe has just consistently been able to grow their top line. And that's true for their bottom line as well. They do have a couple of one-off quarters, but other than that, it's basically just an uptrend to the right. When they switched from a buy once to a subscription-based business model, that was a huge change for the company. And ever since then, they have seen just very consistent, very solid, very predictable growth. And companies like this that have a very consistent business model that are consistently growing their top and bottom line often command a higher valuation. We can see that back in 2023, Adobe was sitting at a forward PE ratio of a 34. However, currently it's sitting at a 19.9. This is because of this uncertainty that's come into the market around this company. But if you believe that Adobe will be able to weather the storm of this additional competition, there's a clear argument that the stock should be trading at a valuation anywhere at least in line with the NASDAQ around a 25 or even up to potentially a 30 or 35. If we're being conservative, I've considered a 30 here, and that would result in a price target of $611.75 or a 50% upside. If you're being a little more conservative and saying that it should trade in line with the NASDAQ, that is a price target of $510 or around a 25% upside. And analysts are expecting continued growth of Adobe's EPS numbers over the next couple of years. For 2025, the average EPS estimate is $20.56. That is up from $18.42. And in 2026, they're expecting that to grow even further to $23.06. However, for the top line, there is a little bit of slowing that analysts are expecting in 2025 and 2026. In 2025, they're expecting only 9.4% growth, and in 2026, they're expecting 10.2% growth. This is the trap that Adobe could get in. If they focus too much on their bottom line and not trying to maintain growth of their top line, that could overall hurt the business in the long term. This is something that we consistently see. These companies that have been able to be consistently profitable oftentimes have a large focus on that. And what they need to do when competition enters the market, they need to be not afraid to innovate and try and continue to grow their top line. And that's why for me, Adobe right now is not yet a buy. I think they could fall a little bit further. It's just a question of what happens over the next quarter or two. I think over the next couple of quarters, we could see some bad guidance as well as revenue potentially falling as competition enters the market. And I think Adobe ultimately needs to pivot their business to focus on this top line and make sure they're maintaining their competitive edge across the market. Again, this is similar to what we saw with Netflix. I think Adobe can do it. It's just a difficult transition to make going from this bottom line focus to a top line growth focus. But let me know your thoughts on this stock. Is it a buy for you? Do you hold it in your portfolio, or are you looking to add it here in the near future if it continues to fall? Let me know down below. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With that said, I hope you enjoyed the video. Thank you guys so much again for the continued support. Drop a like and subscribe down below. And as always, have a wonderful rest of your day. And for the joke of the day, how does a snowman get to work? Check the comments down below for the answer. Thanks for watching.